Coromandel International, opportunity from divergence between performance and price. Quite interesting price movement on a daily chart. Exponential moving average 100 on the top, 50 EMA thereafter, followed by 200 EMA. Price in the company of 20 EMA, a descending channel, Fibonacci retracement, 52-week high, September 1095, December last 709, 52-week low, current price 913, Fibonacci level 53% at a discount of 16% to 52-week high. Triangle formation evident between mid-June and mid-November, along with the indications of commencement of a new triangle. Formation of an ascending channel could be seen from March onwards, with the current price movement hitting the bottom of the channel and moving upwards. Similar trends visible in Bollinger Band, where the price is moving towards the midline of 20 EMA after hitting the bottom. From price action perspective, green candles carry higher volumes and red candles have been having dwindling volume support. MACD indications are a reflection of last year September in the current crossover. All set strong indications of an impending upward journey. Price earning multiple. Coromandel over last 6 years has enjoyed an excellent growth in profits. While market cap has gone up, but the rate of growth has been far lesser than that of profits. As a result, PE multiple has suffered. It has fallen from a high of 22.2 in 2018 to a low of 14.1 in the recent months. Consistent fall. PE multiple at an all-time low and far below the average of peers makes it quite attractive. Great growth in revenue and PAT. Over last 4 years ending September on a TTM basis, revenue growth 3-year CAGR 25%. Between last September and this September, annual growth 55%. Profit after tax 3-year CAGR impressive 32% and annual growth of over 41%. Incidentally, PAT percentage has fallen from a high of 9.6% in September 20 to 7.6% in the recent year. Fall also observed in EBITDA percentage from a high of 14.9% to the recent year low of 10.6%. In both cases, main reason has been increase in input costs, particularly material cost, which has registered a growth from 66.5% 2 years ago, taking it to 81.4%. But the company has been successful in debottlenecking, creating more capacity and increasing capacity utilization. Using operating leverage, reduce the expenses, and at the same time, it had the benefit of generous subsidy from the government and also an MRP which facilitated higher average realization per ton. On contribution of segments to profits, nutrients or fertilizers contribute majority based on September figures. It is almost 90% of company's profits. Nutrients or fertilizers also have the support of subsidy of the government, and that is the reason its contribution is overwhelming. The second segment of crop protection has been reducing its contribution due to market conditions. Its contribution is around 10%. It includes pesticides, insecticides, soil testing, crop advisory, farm mechanization, etc. And the company's profitability has been highly facilitated by the manufacturing segment on production of NPK, SSP and DAP grade of fertilizers, and trading in urea and related products has also added to company's profits. Consistent dividend track record. Company's profits during last 3 years have been quite impressive in growth, but during the period, dividend has been kept constant. As a result, the payout percentage has taken a dip. The median remains at 33%. Market prices have yielded a return of average 1.6%. Modest payout and an impressive yield. A balance sheet is lean and strong. Over years, a growing equity along with earnings before interest and tax. An impressive return on capital employed, notwithstanding the unevenness and moving from 41.1% downwards, now picking up, reaching 36.4%. Sizable growth in return on equity, reaching the level of 27.7% of March 20. The strength of the company is also due to its strong and professional capital allocation strategy. The company into phosphatic fertilizer has a strong presence in South India. Promoters as of 30th September hold 57.4%. Belongs to Murugappa Group. Holding company is well diversified EID PARRYS. Insurance companies, mutual funds, FPIs and DIIs put together have remained consistent and growing. Sizable portion of retail holding. Company is India's 5th largest agrochemical company and keeps growing. A unique case of asset build-up, very positive. Company's equity has grown up, but its liability has grown up substantially during last 6 months. Equity and liabilities adding up to total assets of over 16,900 crores as of 30th September, a clear increase of over 5,500 crores from 31st March, taking the external funding, short-term and long-term, to 56% of total assets from the normal 44%. The reason behind this increase is build-up of current assets. Under 3 heads, inventory due to planned inventory build-up and also input inflation. Substantial increase in subsidy leading to subsidy receivable almost doubling, and there is addition of trade receivables in the normal course. Subsidy receivables likely to be liquidated by 31st March as per governmental practice, and the inventory will be a support for the increased capacity utilization and additional capacity. With that, the asset base is likely to come down to normal, but the company continues to suffer from restriction on exports and administered price mechanism, but the benefits remain. MRP facilitating higher realization and substantial subsidy received, which has helped the company to revise its guidance on margin per ton from rupees 4,500 to rupees 5,500 for FY23. Hope you found this video on Coromandel interesting and useful. I am Vittal Prabhu with the weekly video on Stock Learning Simplified. You can access similar videos at our info card on Stock Learning Simplified. We look forward to your likes, shares and comments. If you are new to the channel, may please subscribe and press the bell icon for timely intimation on our forthcoming videos. Thank you so much for your valuable time and kind support. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, please seek the advice of a competent professional before taking action of any kind.